This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Monday, May the 1st, 2023. Hard to believe we're already in the month of May, but time is just trudging along. Coming up in this show, we talk with Iowa Ag Secretary Mike Naig about his recent trade trip to the Philippines and Vietnam and where he sees us having a deficiency in our trade agreements. Also, we'll take a look at that ag weather outlook, a very breezy ag weather outlook. But first, let's run down those markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're at the end of another trading day, and it's time to turn to Robin Schmahl of agmarket.net. Robin, what did we see in those grains today?
Well, we saw some interesting movement. Of course, the divergence between old crop corn and new crop corn, domestic demand being good. We did see corn export inspections today at 59.8 million bushels. That was up 22.8 million bushels from the last week. So that was pretty good inspected for movement out of the country. But we continue to see that huge inversion between the old crop and new crop corn at this point in time. Now, the commitment of traders was interesting over the last week. Commitment of traders showed funds selling in the futures positions, 67,758 futures contracts, which moves them to a net short of 10,059 futures only contracts. It's been a long time since we've seen that be net short in the corn market. So there is a element of that bearishness that's really permeating through the market. Now, soybeans export inspections were 14.8 million bushels. That was actually up 900,000 bushels from the previous week. So nothing really earth-shattering there, kind of on the light side as far as inspections are concerned. Now, commitment of traders in the soybeans as well, they sold 48,498 futures contracts, trimming their net long positions to 87,132. So there is some selling going on, or there was some selling of those long futures positions last week, and weather probably has somewhat to do with that. We're looking at planting progress, continuing on. Now there's a trend for the next 6 to 10 days of warmer weather, which should increase the planting progress. Now, progress today is expected for corn at 26% complete, was 12% last week. Soybeans at 17% complete. It was 8% last week. And winter wheat crop condition on the report today should be 27% good to excellent. That was 26% last week and right in line with last week. So wheat took a beating today, again, down double-digit losses. That market continues to struggle, both fundamentally and technically. Now, in the wheat market, soft red wheat commitment of traders report showed funds sold 8,877 futures contracts to a net short of 114,163 contracts in the soft red wheat. That's just incredible. Hard red winter wheat, they sold 3,088 futures contracts, reducing the net long to 6,586 contracts. So we did see quite the pressure on wheat. Strength in soybeans, which it was a little bit surprising that we saw that strength in soybeans, even though we didn't see a lot going on in the export market. But if we continue with some better weather coming through here and more corn gets planted, maybe we'll see a little bit less bean acres. Bean demand still overall is running pretty good relative to a year ago.
All right, so switching over to the livestock side of things, how did the cattle and hogs fare today?
Well, they were under pressure. That was expected. Maybe not so much in the hogs, but the cattle were expected to be under pressure because last week we saw a substantial decline in cash. Northern dressed cattle were $3 to $5 lower last week, while Southern live cattle were $2 lower. That set the stage for coming into the beginning of the week under pressure. Now, they did hold pretty well for quite some time in the morning, but then slowly started seeing some more pressure. Feeder cattle with triple-digit losses. Now, the thing that's really amazing, I guess, looking at last week with the lower cash trade, is the cattle that were purchased last week, 43% of those purchased last week were purchased for deferred delivery. That puts packers in the driver's seat coming into this week, maybe in subsequent weeks, because we haven't seen that much of a deferred numbers of cattle purchased for quite some time. Usually it's in the teens to the 20s. And even with the lower prices, seeing that much purchased ahead, it just gives the impression that we're going to see lower cash this week again. Now, on the hog side of the market, after the strong week last week, futures took a breather today. Double or triple digit losses in some of the early months. But however, even though we've seen that, and that's why I said take a breather, fundamental support seems to be growing under that market. Now, last week we had 4 of the 5 days of strong cash, even over $2 higher many of those days. We had variable cutouts, but this morning, starting the week out, for the midday national direct hog prices, we were up $2.40 again in the cash. So packers are looking for hogs right now. Cutouts at midday were up 45 cents. So this lends itself to the more support developing underneath that market if packers are starting to be a little bit more aggressive coming in. Now, Tyson Foods, the plant that they had in Madison, Nebraska, that had the fire, they said that they won't be up and running until the second week in May. And that's not far away, but it's the second week in May. So before they get that back on track again. So maybe even getting that back on track will help as well to provide some support under that hog market that's been waiting for something like this for quite some time.
All right, Robin. Well, if folks want to get in touch with everybody at agmarket.net to talk about some of their options and some strategies they can put in place, how do they do that?
They can give me a call directly at 877-256-3253, or they can call or go onto the website, agmarket.net. The phone number's there. They can call in and somebody will be glad to help with them.
All right, Robin. Well, we thank you so much for the insight, and we'll talk to you again real soon.
All right, thank you. It's always a pleasure.
And that again was Robin Schmahl of agmarket.net. Let's take a look at the closing numbers, courtesy of the folks at Bar Chart. July corn was down a half at 5.84 and a half. December new crop down 2.5 at 5.25 and a quarter. July beans up 8 1/4 at 14.27 and a half. November new crop up 11 1/2 at 12.75 even. Soy meal up $1.20 at 4.3360. Soy oil up 14 cents at 51.81. Chicago wheat down 15 1/2 at 6.18 and a quarter. Minneapolis down 12 3/4 at 7.91. Kansas wheat down 19 at 7.57 and a quarter. July oats down 7 1/4 at 3.04 3/4. On the Merc, live cattle for June down 60 cents at 164.87. May feeders down $1.27 at 209.70. Lean hogs losing 35 cents at 79.30. Pork cutouts down 50 cents at 84.15. And Class 3 milk for May 23. And that's been our market recap. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. And when we come back, we're going to talk with Iowa Ag Secretary Mike Naig about trade in the Pacific region. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Recently, Iowa Ag Secretary Mike Naig went overseas to the Philippines and Vietnam to talk trade with them about our Iowa products that we have to offer. And he came back with a different perspective, including where we need to improve some of our trade relations in that region. Talk about your recent trade trip. You went over to Vietnam and the Philippines, correct?
We did, yes. We got back. It's been a busy trade mission. Spring, Japan and South Korea at the end of February, and then Philippines and Vietnam at the end of March.
So tell us how that trip went and that latest trip, and what kind of things you took away from that voyage.
Yeah, very interesting. Japan and South Korea, of course, are very well established markets. They're in our top five. We have very, very close relationships and with the U.S. and those two countries. In fact, the president of South Korea is just finishing up a state visit to the United States. I mean, there's a very national security connections. These are close markets, and we have good access and good market share. Vietnam and Philippines are still strong markets for U.S. agriculture, but I would put them into more of a developing category. There's a lot more that we think we can do there. You've got both countries are sitting around 100 million people population. They've got growing populations, growing economies. They want to do more of their own food production, which is good for us from a feed ingredient standpoint. So let's sell them grain and DDGs and soybean meal. And then also, as incomes are rising, folks want more diversity in the protein that they have on their plate. So pork and beef are good opportunities there. I think the biggest takeaway, other than these are huge potential for growth in these markets, the other takeaway was that we are at a significant disadvantage from a trade agreement standpoint. Philippines, for instance, we have a 20% tariff on U.S. corn coming in. They have a tariff on U.S. corn coming in, and other countries in the region, 5%. So we're at a price disadvantage right out of the chute. They can like our product, they can like us, they can like our consistency and reliability. But if you're that far out of the market in price, you're going to lose market share, and we are. And so what we came back with, the whole delegation came back with a much greater understanding of the value and the importance of free trade agreements. And again, we're not seeing a lot of activity, really any activity at the federal level on trying to pursue free trade agreements with countries, especially across Southeast Asia. And so I think that was the biggest takeaway, is huge opportunity, but we're at a price disadvantage today.
And that speaks to a situation we're finding ourselves in the economy. I mean, a lot of countries are starting to even maybe push away from that just a little bit to kind of protect themselves in an uncertain economy and uncertain supplies, thanks to all the global, disruption that's going on, whether it's supply chains or wars or other geopolitical concerns.
Well, that's right. And so then that's an opportunity to push into that, right? What's a hallmark, a calling card of U.S. agriculture? Well, it's our consistency. It's our reliability. We're going to talk about a farm bill this year. What farm bills are, well, they do a lot of things, but one of the things that they do is try to even out production. We don't want spikes, and we don't want you as a U.S. citizen to spend 10% of your income on food one year and 40% the next year, and then back to 10% the following year, right? We don't see those kinds of dramatic swings in this country because we have a safety net, because we have programs that help level that out. I think because of the uncertainty in the world and the disruption, China making moves, the Russian invasion of Ukraine is clearly an issue. Weather's always going to be, there's going to be ups and downs. Is South America producing bin buster crop this year or not? Are we? And those dynamics, I think, should drive us to think about, I want to do business with my friends, and I want to do business with somebody that can be a consistent, reliable supplier. Those are things that we can deliver on and have for years and years. We just need to do the things to ensure that can continue to be said of us for years to come. So I think it actually presents us with an opportunity to lean into that and take advantage of some of the characteristics of U.S. agriculture that others can't claim.
And that, once again, was Iowa Agriculture Secretary Mike Naig. Let's go ahead and run down that ag weather outlook. Well, hopefully you batten down the hatches and haven't blown away over the last 2 days. It's definitely been windy with wind advisories in effect across much of the state. Put that on top of flood warnings in the east, and it's made things a little more interesting, to put it mildly. Well, how long is that wind going to stay around? Well, let's see what the National Weather Service has in store for the next 24 hours. Well, the wind is continuing across most of the state. Now, we are seeing mostly sunny skies, too, as well throughout the day, though there were more clouds along that eastern side, right along the Mississippi River there. And we saw highs in the low 50s all the way up to the low 60s. Now, tonight it'll be mostly clear across most of the state, but we'll see some more clouds off to the north and east with more breezy conditions, and the lows will be anywhere from the mid to upper 30s. Now, tomorrow it's going to be mostly sunny and windy across the state completely, and we're going to see highs anywhere from the upper 50s to the mid 60s. Taking a look at the affiliate weather map, again, as we said, sunny and windy across the state, so let's just focus on the temperature differences. Cherokee looks to be about 61 degrees, Shenandoah, the hot spot, at 65. Des Moines will be around 62 degrees, Albia 61, Waterloo 60, and Clinton will be the cool spot at 58 degrees. For more detailed forecasts in your area, tune to your local Iowa Agribusiness Radio Network affiliate. And that's been our Ag Weather Outlook. And with that, we're at the end of today's show. You can find all our content online at iowaagnet.com. Don't forget to follow us on Facebook, Twitter, LinkedIn, TikTok, and on our YouTube channel. While you're there, don't forget to subscribe and hit the bell icon so you can be notified every time we put out a new video product. You can also find our free Twice Daily Market podcasts on Amazon, Apple, Google, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson and Riley Smith, we thank you for watching. This has been Ag Matters PM.